The information presented is for educational and informational purposes only, and does not constitute financial, investment, legal, or tax advice. We do not solicit or recommend the purchase or sale of any security. Always do your own research, DYOR, and consider consulting an independent advisor before making investment decisions. This video was created with the help of artificial intelligence. On Thursday, I sold my portfolio of semiconductor stocks, as I already mentioned in the short video, because I no longer found the risk-reward ratio attractive enough. Maybe it was a good decision, maybe not. Only time will tell. The goal of the test portfolio has always been to outperform the SP500 index. If I were to simply buy the index now, that goal would already be achieved, since my trades so far have delivered a much higher return than the S&P 500 has managed this year. Of course, beating the index in 1 year is one thing, but there is no guarantee that the same will happen in the following year. For now, I believe the most reasonable move is to wait and see when a meaningful correction comes. Until then, the capital can be parked, for example, with a broker that pays interest on uninvested cash, or in government bonds, or in other instruments. And now let's look at the hard numbers. So let's see how the three strategies have evolved. Strategy 1, lump sum, one-time investment, blue line on the chart. The first investor bought an S&P 500 ETF on January 2, 2025, investing the entire $15,000 at once. They've held the position ever since, no additions, no withdrawals. Current performance year-to-date, 31%. The blue line reflects this result, based on the most recent Friday closing price. Strategy 2, dollar cost averaging, gradual investment, green line on the chart. The second investor splits the $15,000 into 12 equal parts, investing $1,250 on the second trading day of each month, into the same S&P 500 ETF. This approach helps smooth out volatility and reduces the risk of poor entry timing. Current performance year-to-date, 78%. The green line reflects this strategy, slightly outperforming the lump sum method so far. Strategy 3, my fictional portfolio, red line on the chart. This portfolio is based on my own stock picks and investment decisions. It launched on March 19, 2025, with the full $15,000 invested in various individual stocks over multiple transactions. I've explained my choices in earlier videos. Current performance year-to-date, 26%. Note, these performance metrics exclude broker fees and taxes. They reflect only market-based price movements. Thank you for joining us on this economic journey with Test Portfolio XSX. If you enjoyed this weekly recap of the key events and our portfolio's performance, give it a like, subscribe, and join us again next week as we review the latest market moves and the progress of our investments. Disclaimer: this video does not constitute financial advice and does not recommend the purchase or sale of any financial instruments. I do not take responsibility for any potential inaccuracies or errors that may occur.